Hello everyone, this is Sherzodbek again from CAU Business School. So today we'll talk about the last week's overview for December 16th to 20th and the coming week's incoming data. US retail sales showed robust performance in November, with headline sales rising 0.7%, surpassing the forecast of 0.6%, and the core sales up by 0.2%, though slightly below the expected 0.4%. This reflects strong holiday shopping activity, reinforcing the resilience of US consumers. In the US, the core PCE Price Index, a key inflation measure, rose 2.8% year over year, slightly below the forecast of 2.9%, signaling stable inflationary pressures. In the UK, the annual CPI held steady at 2.6%, in line with expectations, while Eurozone CPI eased slightly 2.2%, below the forecast of 2.3%. These figures reflect a consistent cooling trend, albeit gradual, across major economies. The Federal Reserve lowered its benchmark rate to 4.50%, down from 4.75%, as expected, signaling a more optimistic view of inflation trends. During its press conference, on the other hand, the Fed reiterated its commitment to a data-driven approach moving forward. The Bank of England also left rates unchanged at 4.75%, balancing inflation control with fragile economic growth. The Bank of Japan, as expected, maintained its ultra-loose policy, holding rates at 0.25%, emphasizing the need to support recovery. Talking about the growth and labor markets in the US, the US economy expanded by 3.1% quarter over quarter in Q3, outperforming the forecast of 2.8%, underscoring strong growth momentum. Initial jobless claims fell to 220,000, better than expected 229K, highlighting continued labor market strength despite broader economic uncertainty. The manufacturing PMI 48.3 compared to the forecast of 49.4. Manufacturing activity remained in contraction, missing expectations. About the service PMI, the readings came at 58.5 compared to the forecast of 55.7. The services sector outperformed, showcasing strong expansion and bolstering broader economic activity. Philadelphia Fed Index, a sharp drop to minus 16.4 from the expected minus 2.9, further underscored significant challenges for the US manufacturers. In the housing market, the existing home sales rose to 4.15 million in November, exceeding expectations of 4.09 million. Despite elevated mortgage rates, demand in the housing market remains surprisingly robust. Energy markets, crude oil inventories declined by 0.934 million barrels, less than the expected 1.6 million barrels, suggesting reduced supply pressures amid stabilizing demand. In summary, last week highlighted the resilience of the US economy, steady global inflation trends, and continued caution from the central banks. As we head into the holiday season, all eyes remain on upcoming data for further insights into economic performance. Regarding the next week events overview for December 23 to 27th, on Monday, December 23rd, the UK will release its business investment quarter-over-quarter data, which is forecasted to rise by 1.4%, slightly improving from the previous quarters of 1.2%. The GDP for Q3 is also expected, with the analysts projecting a modest increase of 0.1%, down from the 0.5% growth seen in the previous quarter. This slowdown highlights lingering challenges in the UK economy. Later on Monday, December 23rd, Consumer Confidence Index will be announced. This index is expected to edge higher to 113.0, up from last month's 111.7. This would reflect ongoing optimism among US consumers heading into the new year 2025. Housing data for November. On Tuesday, scheduled for December 24th, two key housing indicators will be released. Building permits forecasted at 1.5 million, up from 1.419 million previously, signaling continued resilience in housing demand. New home sales expected to rise to 650,000 units, up from 610,000, showcasing robust demand despite elevated mortgage rates. Also, on Tuesday, December 24th, the US will release durable goods orders, a key measure of manufacturing activity. Analysts anticipate a 0.6% rebound after last month's decline of minus 1.7%, reflecting potential recovery in business investment. On Wednesday, December 25th, the latest crude oil inventory data will be released. Analysts expect a draw of minus 4.7 million barrels, matching the previous week's decline. This indicates tightening supply conditions as the winter season drives higher energy demand. On Thursday, December 26, we'll get updates on the labor market, particularly initial jobless claims forecasted at 221,000, steady from the previous 220,000, signaling a stable labor conditions. Continued jobless claims expected at 1.874 million, matching last week's figure, reflecting no major change in ongoing unemployment trends. Next week's data releases will give us a clearer picture of consumer confidence, housing demand, labor market trends, and energy conditions as we close out 2024. Stay tuned for updates, and we'll be back next week to break down these developments for you. See you next time.